Nigeria on Thursday, January 1st, 2026, commenced the implementation of its much anticipated new tax laws and, of course, fiscal reforms. And amid widespread public anxiety, President Bola Tinubu had on Tuesday reaffirmed that the new tax regime signed into law in June 2025 will take effect on January 1st, despite repeated calls from various quarters for a suspension to allow for further review. Of course, according to proponents of the law, the objective of the new tax law is not to punish taxpayers, but to strengthen government revenue in a sustainable manner. Indeed, a lot of argument against and for, argument for and against is there with regards to new tax law. But let's get some perspective on this now. I'm now being joined via virtually from here in Abuja by Mr. Steve Nwachukwu, who is the lead economist, Steward Asset Management Limited. He joins me virtually from Abuja here. Good morning, Mr. Steve.
Good morning and welcome to 2026. Happy to see you.
Happy New Year to you, Mr. Steve. All right. Okay, we also expect Mr. Wilson Agaba to also join us in the course of our conversation. But Mr. Steve, let's start from the controversy with regards to this law. Of course, when this bill was introduced, there was a lot of controversy, rejection, especially from some parts of Nigeria. The back and forth, after months of deliberation, the law were passed and, of course, ascertained to by President Bola Ahmed Tinubu, only for another controversy to arise, this time around the alteration between the harmonized law and the gazetted bill. I mean, what will you say about this controversy? Was it necessary?
It wasn't necessary, and have in mind that the intentions and the principles around the Finance Act is actually to put some clarity to some of these very issues that leads to multi-taxation system or regime we witnessed in the past, and also, like you alluded to boost and to make sure that the government revenue also increases in a way of getting more Nigerians into the tax net. So that's the main intentions of that very law. And the controversies, like you said, is not needful. There was no need for us to run into such. Although it could also be traced to some of those clauses available in that tax law, the proposed law as it were, where government proposed to move the value-added tax from 7.5% to about 10% and progressively to 15%, which a good number of us stood and told the government, and alongside with some of these northern state governors, the hardship it will bring, and government listings and the reverse and return that very value-added tax at 7.5%. I think that's the big win of these very tax reforms. Yes, the controversies are most of these very hyped or misconceptions Nigerians will always have because of that lack of trust that people have on the government. So most of these gray areas, they amplified it, they took it out of proportions, and they make it look as if the tax law has actually come to drown and drain Nigeria. So which is not actually what it ought. Just like I said again, people have lost trust in government. So government have in the past have not really justified the available and mega resources within them. Why are you asking more from the government? So the posture of this very government, President Bola Ahmed Tinubu, is to take from the people to the center so that he can be able to administer, or he can be able to engage in other larger functions in the society, which cuts across the developmental issues, legacy problems we have, both in power, in transportation, in electricity, name it. I think that's the intention of the government. But like I said again, people have lost trust in the government. That's why they will always push resistance to most of the government policy decisions. So like I said again, the big win is actually the retention of 7.5% as value-added tax.
Right,
if that had gone to 10, would have been a situation where Nigeria will suffer most.
Yeah, Mr. Steve, like you rightly pointed out, the issue of trust between the government and the people. But let's also look at the concern raised by some Nigerians as well with regards to this tax bill. According to them, it's like government is putting the cart before the horse. I mean, shouldn't we are putting the horse before the cart, as the case may be? No social amenities available. I'm sure when you live, you provide your security, you provide your water, you pay for light and so many of that. What exactly is government doing for Nigerians that warrant them to pay for? That is the questions many Nigerians are asking.
Yes, I think that is the backdrop of these very controversies, in the sense that government, both past and present, have not done much to improve in this very area, to build the trust they needed. And they shouldn't be coming to the people to ask for more. Earlier, I said that most of the policy decisions or policy programs of the government seems like they want to commercialize every single law. They want to concentrate more money on the government than releasing more resources and funds to the public or to the people. So I think this is where the gray areas are. So governments in the past have not been accountable. There is no transparency. There is a lot of velocities, budget padding, name it, wastages we have seen in the side of those who wants to implement or those who is asking for this money. So I think that is where the strokes is. Government needed to work on this, build the trust, work with whatever resource you had earlier to improve in that trust, so that when you ask for more money, Nigerians will gladly and willingly give you the money. But that is not the case. That's why these fears and controversy will continue to tread these very decisions of government.
Indeed. Let's look at some of the clauses, some of the sections in this tax act that a lot of Nigerians really do not understand. Talking about the eligibility or deductions as well. If you look at section 30 of that law, talk to us about the chargeable income, especially on individual. Can you expatiate more for Nigerians who are still concerned about how this is going to be applied?
Yes, of course. Every Nigerian is assumed eligible for tax payments, even when you fall short of the threshold, which gives you that exemptions. You ought to assess yourself as an individual or provide yourself to the tax authority to be assessed, and that's what the law says. And what it means also is that, as the law implies, as the law speaks today, there is a threshold for individual, which is about 800,000, which is anchored on the 2024 Minimum Wage Act, which is 800,000. So once your gross earning, income, salary, everything put together is less or equal to 800,000 naira, you are not eligible to pay tax. That's what the law says. So if your salary is about 70,000 or 75,000 times 12 or thereabouts, and you had all that sources of income put together, everything is not up to 800,000 or is equal to 800,000, you are not eligible to pay tax. But you can also be assessed. The law says that you should also make yourself available to be assessed, and you should report yourself that this is my income, and all put together, this is what I could earn in a year annually. So I am not eligible, but government will take note of that you are not eligible to pay tax. So why are Nigerians concerned about these new clauses? Nigerians are concerned because prior before now, you don't really need much, or we don't have much of this very quest from the government to raise resources or to get more Nigerians into the tax net. Have in mind that this present government has a tax policy or a tax regime where he needed to move from 10.5% net tax to GDP to about 20 to 18%, and which is impressive in the sense that we needed more Nigerians into the tax net. So the eligibility now, you earn salary, you make profit from any other sources, or your professional fees, or your bonuses, or compensations, and what have you. These are what are eligible for tax payment. You earn salary, you have other side hustles that you do that earns you profits.
All right.
Brings more income to you. They are all eligible for taxation. So that's what the law says. So, but the point is, if you put all of them together, what Nigerians should be concerned is that if you put all these various sources of revenues together, if they are not up to 800,000, you fall within the exception list. That's what the law says. So if it's above 800,000, you have to subject yourself to the tax authority so that you can be assessed, or you could assess yourself and pay the required tax to governments. So Nigerians are concerned because most often they don't have a good record of this very financial transaction. What this also simply means is that Nigerians should start imbibing that very culture of keeping financial records and naming and tagging their transactions so that they can specifically speak to what expense or to what transaction is this. And also, with this new tax law, it's also good that Nigerians should realize that you don't allow such transactions or money to flow through your accounts when necessarily or when unnecessarily. Perhaps somebody will give you money, so go and make this payment for me. It has no bearing to your earnings. So you have to specify every single transaction so that the tax master or the tax authority will not mistake such huge transactions or volumes of money as gains or profit that you must have earned during the course of the year. So this is what Nigerians should understand now, that there is need for you to take proper record of your finances.
Indeed, taking proper record of finances is very important. Let me bring in Mr. Wilson Agaba, who also joins me virtually from Abuja here. Good morning, Mr. Wilson.
Good morning, and thank you for having me, Mr.
All right, I'm
Yusuf.
sure you've been listening to the conversation between me and Mr. Steve there. But let's talk about, before we go to the sections of the law, let me get your take about the plans by the National Assembly to release certified tax bill amid gazetted discrepancies claim, of course, at a time where the implementation has already commenced. I mean, is this coming too late? Or in your opinion, is it coming too late?
Well, I have listened to several legal luminaries discuss the issue of regazetting of the tax bill. And all of them tend to favor the fact that we cannot go ahead to implement a controversial tax law, especially when there is a potential criminal offense involved. Many of them, including citing cases from the past, have remained on the side of fully investigating the issues, publishing the outcome of the investigation, prosecuting whoever is necessary to be prosecuted, then take what we call take an action to correct the anomaly. And there's one particular lawyer, I've forgotten his name, that did a very refined analysis of the situation, and I kind of follow him in that. He said there are two basic issues that needs to be understood here. One, the law that was assented to by the president, is it the same one that was signed and approved by the National Assembly? If it is, then the issue is a different issue. We can say, okay, having found that copy, that it is what the National Assembly passed, that the president assented to, then we can say, okay, in between the president's assent and the gazetting, something happened. Who did it? So you figure that person out, punish the person for the criminal offense. In that case, we can say, okay, let's now gazette the right copy. The other scenario is where what the National Assembly assented to is different from what the president assented to. And where this is the case, it means in between the NAS approval and the presidential assent, changes were made. And the president went ahead to sign on it. Whoever committed an offense there should be fished out and also be dealt with. But in that case, the bill becomes null and void and has to go through the process the legislative process all over again before you can implement it. Now, as it stands, we don't have a clarification on these two scenarios, and yet we are implementing the law. I don't think that this is a good start. It is a good thing to expand the tax bracket. So many of us have advocated for this long time. From previous administration, we have continued to tell them, expand the tax net, expand the tax net. But we should not do it in a way that its foundation is already controversial. And if in the future somebody gets a judgment against this very foundation, then there will be huge problem. And what would this problem be? Where do we now situate the house when the foundation has been pulled from under it? How are you going to return the taxes that have been collected under that law? Another issue that I have problem with is sensitization on this new law. I would have thought that we will have at least a concerted effort to orientate Nigerians across the country, across every length and breadth, about these new laws, its workings, and the mechanisms that are there to help those who may not have the technical and intellectual capacity to do self-assessment, remittance, and all of that, to us orientate and enlighten Nigerians about possible scams that may come up and how they can navigate the territory of the scam-infested areas of the Nigerian financial environment. This ought to have happened for at least 6 months. I didn't see that happen. So at the end of the day, we might have a very noble idea, but we may have set a wrong foundation and precedent for it. And we may have gone about it wrongly in terms of implementation.
All right.
Remember the repenting of the Naira and whatever happened towards the end of the Buhari administration. We did say orientation, provision of alternative mechanism, provision of access to relevant information and relevant help, and all of that. They didn't do it. That is why the project failed. This is still the same thing this administration is trying to achieve through another means, but we have continued to put orientation and enlightenment of the populace at the back seat, and that is why we fail.
Indeed, that's why we fail. A lot there for National Orientation Agency to do. Let me come to you, Mr. Steve. Talking about taxing Nigeria now, another important part that Nigeria want to know is which part of their income is chargeable, which I think is very important. If you look at Section 4 of that act, there is talking about the income that are actually chargeable in this point. Can you put us through that, Mr. Steve Nwachukwu?
Of course, if you can, I can barely read what is available there, but you have it there on the screen, which has to do with the salaries, wages, compensations, bonuses, and other extra incomes that a Nigerian can earn from side hustles, dividends, name it, just whatever is turned at profits to you. So these are what is eligible. These are the chargeable incomes of Nigerians that are subject to taxation. So first, I think I need to also state this. Even in advanced societies in the world, there is always this level of resistance. And one thing between the taxpayer and the tax authority is always a log ahead, but I think it's worse in our own case or in our incline because of the level of maladministration, the level of deceit, the level of velocities, and the level of wastages we witness among our political leaders, those who have or those who are in control of these very resources. I think that's where the challenge is. There's always this natural pushback from the tax authority, which is the government, and the people. When Nigerians are being asked to give more money, there will always be this resistance. So speaking to the awareness also, I think, yes, of course, I agree. Awareness was not that much. Before now, We've had a couple of town hall meetings. We had sensitizations, but they are not good enough to actually clear these very gray areas. And with that very existing suspicion that Nigerians always have, that fear, that very lack of trust that have existed between the people and the government, and that have also spring into these issues of the tax and clauses in the tax. The misconceptions are out there, and they are fueling these very issues of the gray areas that needed to be cleared or amplified or explained. Speaking around the controversies also witnessed along the gazetting of this very law. Yes, of course, there could be some people who may have felt that this is the wrongest way or the way they can actually insert some of these clauses, and which is totally wrong. And the only effect it will have on the law is that those sections and clauses that contravenes what was originally passed by the legislative house or the National Assembly will remain non-avoid. Not the entirety of the law itself, because it's based on those very clauses and sections and chapters and paragraphs that perhaps something changed or something was manipulated. And like Agaba said in the studio, yes, those individuals need to be brought out and be punished. Is it done with the intention of deceiving Nigerians, or is it done with intention or by error and omission? So possibly there are existing scenarios that Nigerians, the executive and the legislature can follow to resolve these very issues around this, the gazetted and the clauses available in the gazetted that is not originally there in the law passed by the National Assembly. I think those issues need to be dealt with so that Nigerians can also get clarity on that. So back to your question, which has to do with those chargeable profits or chargeable incomes of Nigeria. Like I said again, it cuts across your salary, your income, your profits, sales of property, that although there is a threshold to such sales of properties and the rest, and bonuses, compensation, these are what constitutes a chargeable or taxable incomes of Nigerians. Thank you.
Indeed, Mr. Agaba, let me bring you into the conversation now. The banks are already sending messages to their customers. Of course, part of the messages I received was a changing to stamp duty now instead of electronic transfer. Did you get any messages, and what are your banks telling you?
Those messages rain on me like early April rain coming from the high heaven. As I get them for my personal accounts and my corporate accounts. So I've received the message. And like I said, when you don't provide appropriate information, there will be vacuum. And once there's vacuum, any and every information can fill the vacuum, because in the information environment, there is no vacuum. If you don't put something there, something will enter. So people have a misconception. Now, a lot of people believe that they will charge you for this stamp duty as the sender and will still charge the receiver for electronic transfer levy. But from my understanding of the message, I don't think that is true. Before now, if I send you 10,000 naira, as it is landing in your account, they will debit you for 50 naira. But what they have done is that the receiver is no longer liable for this payment. It is the sender who will pay for it. So as you send money to me, 10,000 and above, you will be debited 50 naira alongside other charges, while the receiver collects their 10,000, which makes some sense to me anyway. Because if you notice, most times when you go to buy things from small businesses, they don't want to collect transfer, because you have bought something for 5,000 naira and you are going to make a transfer to them. I'll say 10,000, 13,000 thereabout. You want to make a transfer to them. They will be charged for 50 naira and they will be charged for SMS charges. And some of these things they sell, their profit margins are very small, sometimes 50 naira, sometimes 20 naira, and all of that. So if they are losing 50 naira, they are discouraged from accepting electronic transfers. So, but if you now put the charges on the person sending it, Well, it might motivate those who are selling to accept transfers. You know, the more money we can keep in the financial system, the better the economy can be managed. So that is what is going to happen. And then the nickname was also changed. Instead of electronic transfer levy, they reverted to the stamp duty that it was called under the Buhari administration. But this is also separate from all the other charges that accompany your transfer. For instance, when you make a transfer, there's usually a transfer fee that is charged, and then a VAT is also charged on that fee. So you see something like maybe you are transferring, say 10,000, you will see another charge of about 26 naira or 26.5. That 20 part of it is the transfer fee, the other part of it is the VAT. That transfer fee is shared among the participating stakeholders in that transaction. If you are transferring from one bank to the other, the bank will take part of it. The sender's bank, the receiver's bank will take part of it, and the interface that connects them will also take part of it. So those charges will still remain. And you will still pay for your SMS charges. For alerting you on every transaction and even sending you birthday messages. They will still charge you those ones. They still stand. However, the clarification here is that you are not, the 50 naira stamp duty is not collected from both sides. Only the sender will bear it now.
Indeed, right? That's a very good clarification there from banks on that. Of course, we hope that it will not create more confusion. Mr. Steve, there's also some section on that bill there, out now, already been implemented. Section 56 down to 59, talking about effective tax rate. It's actually in part 4 of the act. Talk to us about a lot of Nigerians and businessmen especially want to know about what how that section relate to their businesses.
Okay, yes. It simply states the obvious that one, if you have to pay tax, that the effective tax rate is a minimum of 15%. So, and it's progressive in the sense that based on individual, more revenue or more incomes you have would determine that you pay more, but the minimum you will pay as an individual is about 15%, and that is also applicable to companies and institutions and corporate organizations. So that's the effective minimum taxable rate that Nigerians can pay. So, and it also implies that the more you earn, the more you pay. It's progressive in the nature, in the sense that the target is to take more from the rich. Those who earn above 50 million, 60 million, they pay more, while those who pay maybe earn around 2 million, 2.2, 1 million, we pay that minimum rate of 15%. And those who earn less than 800 or 800,000 has a 0% tax levy or tax obligations to the government. So it's progressive in the sense that the more you earn, the more you pay, or government takes from you. That's what the implication of that section also imply. Thank you.
Indeed, there's also developmental levy as well that is being imposed, 4%. What does that really mean?
Okay, that implies also it helps to take away those very multiple tax system or multiple taxations we witnessed in the past, where Nigerians and corporate organization has to pay different types of levies and all the rest, and they are conflicting in the sense that a state will have what they will charge you, other states will have what they charge you, and all the rest, and that makes it a multiple tax system or multiple taxations that corporate organizations receive. So with this new clause in the new tax law. It simply means that you have a harmonized 4% you are going to pay as a harmonized version of harmonized tax payments that will go down to, I think 50% will go to education trust fund, about 15% to police trust fund, to so many other sub levies that Nigerians earlier pay individually or pay separately. Now they are all harmonized and pulled into one 4% that will be remitted to this government, and this very account, a separate account, which will now disburse to these very bodies and institutions as education tax and trust, police trust fund, and the rest of them. So that's the implication. Now, the sections of that very law also provides or equip the states to harmonize, to recognize this, so that every other thing will fall into this. You will not have a multiple tax system that we used to have. Thank you.
Indeed, not having multiple tax system is indeed a very good one. Mr. Wilson, it does seem that this harmonization, maybe in the long run, is in the best interest of Nigerians.
Yeah, like I said from the beginning, I know we had a lot of conversation both on your platform and most other national media when the conversation about the tax reform was ongoing. And one of the things I kept harping on at the time is we need to unpack the reform and look at it section by section, segment by segment, for the merit of each segment and how it fits into the entire goal. There are areas that people didn't quite understand and that they have their reservation for. And I said at the time, instead of throwing away the entire reform, let us drop the areas that are controversial and focus on the areas that we can agree on. After we achieve agreement on majority of the areas, we can now take the one with gray marks on them and begin to dissect them and make them into something that is integrable into the main this thing. Now, there are very many positive aspects of the new tax act. For instance, harmonization of some of these taxes, as mentioned by Mr. Steve earlier, it makes it easy for businesses to operate within the country. Maraba, something that you have settled the FCT, as soon as you cross into Maraba, another set of guys are wearing some unknown uniform there and stopping you, and you have to pay again. Removal of all those people collecting local government taxes and all of that from federal highway is also a good thing, because one of the reasons you pay so much for food and other consumables is because of the cost of transportation. I was speaking with a friend somewhere in Benue the other day, and he was telling me that the village where he is, that people take yams to the market and nobody to buy, and they return it home. So he was telling me that I could practically buy up to 20 big tubers of yam for less than 15,000 naira. But we are here in Abuja buy one tuber of yam for more than 6,000.
Absolutely.
What is the problem? Because to move those products from that village where he is to Abuja, by the time he gets here, it's already equal to that 6,000 per tuber. So if this is getting rid of all of those troubles, and assuming our other friends who keep us safe on the road and also collect offerings from us are able to pipe low on that, then you can see the overall impact on the economy. Also, harmonization of other smaller fields, especially that is it development levy you mentioned, the 4%. Before now, you will pay for industrial training, you will pay for there are about 5 or 6 of them that you will so percentage of your income, percentage of your income. And the process of filing this thing is not that simple. You have to go and file with these people, file with that person, file with this agency, file with that organization. Is taking time that you should put into producing your product and marketing it. So this is also a good thing. Another good part is the corporate income tax. For small businesses that are not doing up to 100 million, it means a lot of these small businesses will be left alone. to focus on reinvesting whatever they make to growing into becoming bigger enterprises.
All right,
So
Mr.
that is,
Wilson.
up until now, it used to be 25 million,
All right.
which many small businesses can easily meet.
Mr. Wilson, before we go, Mr. Nwachukwu, I want to, you are a stockbroker, and of course, this tax will also affect traders in the stock market. As a shareholder, for example, if I own a share in the stock exchange and I sell my shares and make a profit, am I going to pay tax on it? Which is something that we need to clarify. A lot of stockbrokers are worried.
Yeah, that falls under the capital gain tax, which there are still gray areas of controversy since the misconception on how it is applied. EX also has a cap in the sense that every of these very sections of the law has a threshold. It's not applicable to every single trader or buyer or investor in the nation's capital market. And yes, it applies to high volume network individuals or corporate organizations where you dispose of your assets or shares worth over a certain volumes which crosses the threshold. Yes, you are eligible to pay a capital gain tax, and which varies 30% to 25% depending on the size and the volumes. And there is also that clause that gives you that leverage. If you can reinvest it into the market, you are also exempted from that very tax. So that is what also is applicable to every trader, in the sense that there must be a reference date and a reference price. A reference date here implies that the reference date starts from today, which whatever price you have today's trading or starting on 31st of December 2025. That would be the reference price, and reference date would be the first, or which is the first trading day is today. So these are what sometimes Nigerians don't get to understand, that the gains you have recorded in the last 4-5 years that we have seen boom in the capital market is not applicable, because the reference date or the reference price is today. So the whatever calculation will be onward from now, whatever profits you make from today onwards and to a certain threshold, and if you are totally exiting the market, that is where this very capital gain tax will be applied to you, not for the general traders and investors, and which 90 to 95% of us, or 99%, always involved on daily retrading and reinvesting such funds, except where you want to pull out of the market entirely and your volume cut across over 500 million value of transactions. That's where this very law or this very capital gain tax will be applicable to you. Thank you.
All right. Mr. Wilson, in 30 seconds, talk to us about what impact will this new policy have on foreign investment, especially?
Oh, well, even with the implementation of this law, I don't think that our taxes on investment is higher than many countries. So, well, as much as making it more stringent will discourage people who used to dodge taxes, but I think it's still positive in all, because of course we cannot subjugate our national interest to the interest of people who don't want to do business in a straightforward manner. But overall, I don't think this makes our investment in our country less attractive than it is for any other country. I believe that in the long run, if we even implement this properly and thoroughly, it will encourage more investment in the system, because investors like predictability. If I can calculate what I'm going to pay from the beginning, then I can always do what we call a present value of a future earning. You can do that today and determine which investment is more attractive to you. So overall, I don't think it will be a problem.
All right. Thank you so much, Steve Nwachukwu, Lead Economics, Steward Asset Management Limited. We thank you for your time. And of course, Mr. Wilson Agaba, financial analyst, thank you so much for your time on Business Daily today.
Thank you so much. Mr. Steve, Happy New Year.
I wish you the same, my brother.
Yeah.
Thank you so much, Mr. Steve Nwachukwu. We appreciate your time. And of course, Mr. Wilson, we appreciate you both.
Thank you very much for having us.
All right, well, that is a wrap on the show for today. And of course, for the week, we'll be back on Monday. I am Yusuf Akogu.